everybody. What is insurance in the mortgage world? We're not mortgage brokers, or excuse me, you're a mortgage broker. We're not insurance brokers, but there is insurance that comes with a mortgage.
Yep.
What is that? We're going to talk about that.
Yeah.
Right? I'm Cliff with URA Real Estate, and of course you know.
I'm Bex with Sun American Mortgage.
Good. We were just talking about it. You had a good weekend?
Yeah. I got to go out and went up to Escalante and did Lower Calf Creek Falls hike. It was wonderful.
Lower Calf Creek hike.
Yeah.
You said it's 6 miles?
Yeah, it's about 6 miles round trip. Worth it. Take a lunch, hang out.
So from the city, how far of a drive? Like from here?
From here, it was about 4.5 hours.
But it's worth it. You could do that in one. Well, I guess you'd want to spend the night. But
yeah, spend the night. There's some cute places out there.
Yeah, you said you got an Airbnb for $100.
Yeah, $100. Gets you a little cabin. Yeah.
And look how tan. Look at that.
I'm trying. Gotta keep it.
We should do the tan update like I did the snow update. All right, Bex, what's the week report?
Yes, so rates are holding. We had a little bit of some volatility last week, but true conventional rate right now is 6.625. Advertised rate, you're kind of teetering between 6.375 and 6.125, somewhere right around there with a point buy down. And then on the FHA side, we're at 6.25 still, true rate, and then advertised rate is about 5.75.
5.75.
Yeah.
Very nice. Hey, in the fives.
Yeah.
That's
so
great.
Still really good options out there.
Good. So that's the weekly update.
Yeah.
Let's talk about insurance for the mortgage world. For all of our first-time home buyers and those who don't buy very often, you may hear the acronym PMI.
Yes.
What does that stand for?
Yes. So private mortgage insurance, this is different than home insurance. So a lot of my first-time home buyers do have that question. You do need home insurance and then mortgage insurance, private mortgage insurance. There's two different kinds if you're going with a conventional option or with an FHA option.
Is it have different acronyms?
Yes, so usually with conventional is PMI, with FHA it's MI.
So PMI because it's private.
Yeah.
So you're kind of going through.
You can shop it around.
Right. So you're not going with FHA, which is government backed.
Yep.
So that's why you need mortgage insurance. Okay. So what does it do? I mean,
yes.
Why do you need it?
So it actually came about in about the 50s. When home prices started to get so expensive and people weren't able to bring in as much of a down payment, they created this mortgage insurance to help protect the lenders, which then incentivizes lenders to still lend you funds, a larger lump sum of that fund to purchase a home with less of a down payment.
Okay.
So it gives you as the buyer the advantage of coming in with a lower down payment, and it helps protect the lender as well.
Very good. So let's say I get a conventional loan, right? So I have PMI, private mortgage insurance.
Yeah.
Let's say I can't make a payment or goes 3 months without making a payment.
Yep.
What does that insurance do then?
Yep. Then you go into default. Obviously, there's proceedings that go into place, but most of the time, you're going to have to sell that home, right? And someone that comes in to buy it may not be able to cover the whole mortgage. And so they pay what they can, and then the mortgage insurance comes in and helps pay the lender the difference.
Okay. So it insures the lender.
Yep.
And again, just be clear when you're going to buy a home, it's not home insurance.
Correct.
It has nothing to do with if your home is
Protecting the home.
damaged or anything. It is actually a protection for the lender.
Yes.
But you will need that. So the two, again, the PMI is for
Conventional. Yep.
And the MI, mortgage insurance, is for
FHA.
So how can you, let's say you're doing conventional, let's just focus on that for now.
Okay.
How can you get around the mortgage insurance, or the private mortgage insurance?
Good question, yeah. So if you're coming in with 20% down, you are not required to carry the PMI.
And why is that?
That is where that breaking point is, that the lender feels comfortable and confident enough that you're bringing in enough funds to help cover any type of potential gap if and when you had to sell the home.
So that's good to know, right? Because let's say you're a lender and somebody comes in and says, I can put 3% down.
Yeah.
Or you have somebody else that comes in, I can put 25% down. Well, who's going to be
It's a lot more appealing.
Yeah, who's going to be the bigger risk? Obviously the one has
with the
3%.
lower down.
Right.
Yep.
So, okay.
Yep.
So let's say that, okay, I can only come in 3%.
Yep.
But I want to really try to get rid of that private mortgage insurance. Can I do that?
Yeah. So a couple different ways that it happens. When your home gains enough equity, has at least 20% in the home, then the mortgage insurance automatically falls off.
Okay.
So as you're making payments, obviously the home is going up in value in most cases. Once you get to that breaking point, the mortgage insurance automatically drops off.
So a lot of buyers are smart with their money. What they do is they make a payment and a half.
Yeah.
Or 2 payments. And any extra payment, you can correct me if I'm wrong, doesn't go towards interest. It actually goes toward the principal.
Which helps pay your loan off faster.
So you're paying it off faster, so the equity
builds faster.
So you can actually get rid of that private mortgage insurance, which on some loans can save you between $200 and $500 a month.
Yep, absolutely. And then the other option is obviously a refinance at some point. If you feel like maybe you've come into some money and you want to pay a little bit more directly towards the principal, refinance your rate, there might be an opportunity to remove that mortgage insurance if the home has enough value. Excellent. At that point.
So that's with a conventional loan.
Yep.
So everything we just talked about is only for conventional. Let's switch over to FHA. That is MI or mortgage insurance. Now, maybe just explain the difference.
Yeah,
there.
That's a little trickier. It is a government loan, so their mortgage insurance is more set. They have a certain amount that you pay up front that can be rolled into the loan, but it's added to your loan balance. And then there's also a monthly premium that you also pay. So that is why on an FHA loan, your debt ratio could be a little bit higher than a conventional because it's factoring in some of those costs that will be added. And even if you're coming in with 20% with an FHA loan, you are still required to carry mortgage insurance for a certain period of time. It's typically 11 years if you're coming in with a larger down payment. If you're coming in with that minimum down payment of 3.5, you typically have to carry it for the life of the loan.
For the full 30 years.
Yep.
So what if if somebody has an FHA loan and they're making double payments and they get to that 20% equity, does that mortgage insurance go away?
It does not.
Right.
So it will stay on. So typically in those cases, I highly recommend looking at a refinance if that's where your situation is.
Mm-hmm. So again, there's differences. Now, the mortgage insurance for FHA, is it as high of a payment as something private mortgage insurance?
Yeah, it's going to depend. With conventional, because we can shop it around, there's about 5 different companies that we can shop it and get the best premium. It also is going to factor in things like your debt ratio. It's going to factor in what your overall credit score is if you're a first-time home buyer. And one of the other things that a lot of people don't know about is if you have multiple borrowers. Then it's less of a risk is how they view it. So you can actually get a better cost for conventional versus if you're not a first-time home buyer, you only have one person on the loan, credit score is a little bit lower, your debt ratio is a little bit higher, you're going to pay a little bit more for that. So depending on those case by case, it can be less expensive than FHA or it can be even a little bit more expensive than FHA.
So basically what Bex is saying, shop around.
Yes.
Know
and we
your
can
facts.
help you with that.
Yes.
We'll help you with that.
Because it does affect your monthly payment.
Yeah.
FHA may be the best thing up front to get you into a home.
Yes.
Maybe in a couple years if you think, hey, I do have 20% equity into this home, refinance. But know your options before you start getting into the home because it will affect your monthly payment.
Yeah.
Yeah. Great. Again, we're not insurance brokers, but it does have an effect on your mortgage.
Yes.
PMI, private mortgage insurance, and MI, mortgage insurance. Remember, one is for conventional, the other one's for FHA. What else?
You got it? Yeah, those are about the highlights.
Okay. Thanks, everybody. If you have a question, we haven't had any in a while, so let us know. We'll talk about what's interesting to you. So
awesome.
Have a great week. See ya.
See you guys.